Greg here with the market update. Okay, one of the things that we have mentioned on recent market updates is that at the moment we have a very nervous market. So a market that it does not take much for the market to start selling off, right? So seeing risk off trading and basically seeing bearish trading hit markets across the board. Obviously, the big cause of this volatility and the selling bias is Trump and obviously Trump's tariff policy. And the fact is now that the tariffs are live and a global trade war has started. But look, there is also something else that is bothering the market now, something meaningful that we've seen this week, and that's some economic data out of the US. And it has come from the Fed Atlanta, or the Atlanta Fed GDP nowcast. So this is basically a live tracking GDP that the Atlanta Fed does. And so what that has shown, it is shown that in the last couple of weeks, GDP has fallen from being above positive 2%. Down to early this week, down to minus 2.8%. So we've almost seen a minus 5% swing in US GDP. This is huge. This is something that certainly has got the market's attention. And the reason for that is that obviously, two things, is that it looks as if potentially that the US economy is moving into stagflation, so that we are seeing lower growth with sticky inflation, which is a big negative, and obviously not bullish for markets in any sense. And the other thing is too is that negative GDP is recessionary. So this is certainly something that the market now is not going to forget in the short term. And so when we do see US economic data now, if that underperforms and comes out weaker, the market will take notice, and no doubt you'll see that selling come in very quickly. Big data print, obviously, that we do have this week is non-farm payrolls, US employment data that comes out on Friday. So that is going to be closely watched. Certainly don't want to be seeing that NFP print miss on the downside. Now, one of the markets that certainly has been following, I guess look, this weaker US GDP expectation is US bond yields. So we have US 2-year yields at the moment that are been trading under 4% and around 4% at the moment, and US 10-year yields down towards 4.2%. So if I take you back to just before Trump was inaugurated, the highs for those yields, 2 years were up around that 4.30 plus area, and 10-year yields were as high as 4.8%. So we've seen 2 yields lose at least 30 basis points, and 10 years a whopping 60 basis points. So I would suggest that if the economic data does weaken, those US bond yields will trade lower, and what the market will be saying there is that they're basically bringing the Fed back on the table and expect Fed rate cuts. And what that will mean for the US dollar is that we'll probably see a trend change from that strong US dollar to a weaker US dollar. So look, this is not a trade for today. This is a trade to potentially watch out for on if we do see weaker US data coming up in the near term. Okay, so moving along, just let's talk about a couple of commodity markets. The first one, crude's very interesting. We did get OPEC come out this week. What they did say is that the production cuts that were expected in April are not going to go through. Looks like they're not going to go through with that. So we did see crude a lot lower on that. It looks as if Trump has obviously put some pressure on the Saudis. He certainly does not want to see crude higher. One of his policies is to see crude a lot lower. to get the inflation lower, and obviously then get the Fed to cut rates as well and get the cost of living lower. So I'd suggest that look, it's not worth fighting Trump on this one, or probably on anything. But so yeah, with a high conviction, it seems as if crude is certainly and continues to be a sell on rallies. So certainly, if you get crude back anywhere towards $70, that'd be good levels. And if we do get a break technically around that 65 and lower, it could open much lower levels. But yes, trading crude from the short side certainly seems the way forward. Look, gold's had a good week so far. Closed last week around that 58 area. We're up about $60 as I speak. But I would be a bit cautious at these levels now, especially if you're chasing this fresh long, just for the simple fact that technically we had a bearish key reversal from record highs last week. And when you get bearish key reversals, that basically technically says that, look, in the short term, you can expect a meaningful top in place. So certainly don't expect a new top, this week, that's for sure, above that 29.50 area, and that you're supposed to get new lows. So yes, again, I would not be chasing gold fresh long at these levels just on the back of the fact that technically we had that bearish key reversal. Okay, something that market needs to focus on, I guess, today is the next few hours. Trump is going to make his first address to Congress after his first 40 days. He did tweet that he was going to announce something big. Market is speculating that that he will be signing the minerals deal with Ukraine. So if that does happen, that will basically mean that we are a step closer, or a very big step closer to peace for in the Russia and Ukraine war. So obviously that's a big deal. But look, that's not confirmed. Who knows what Trump's going to say? But look, every time he does speak, he moves markets. Good luck with everything, and we'll catch back in with you shortly.